Rahul Sharma. He's joining us from JM Financial to discuss the technicals of the market because it's been very wobbly of late. Rahul, hi. Thanks so much for making time and speaking with us. Just wanted to begin by discussing the market texture with you because after that 20,200 level, we have suddenly slipped down all the way to 19,750. What do you make of this? Is it just the weekly options expiry move, or this was the consolidation that the markets needed?
Yeah, very good afternoon. So there are two sides to every market move. So the good side is the correction is happening fast. The bad side is the correction is pretty steep in terms of number of points. But that is something that we can expect considering the way we moved from 19,200 odd to 20,200. Now the crux of the whole situation is the entire bullish setup should remain intact as long as we do not breach 19,600 on a closing basis. So like you said, it could be expiry related overreaction on the downside, but my sense is we should be looking at cherry picking some of the stocks and sectors which stand out in spite of the broader market fall. So Nifty, maybe another 100 points on the downside. We should see some support coming in at 19,600. And as far as the banking index is concerned, that index is already at the support area of 45,000. So on the closing basis, something which we should look at because the kind of volatility that we've seen in the last few days, it has been quite fast. And secondly, sectors which look good. So one is public sector enterprises continue to remain pretty robust. Second is auto space, select auto stocks continue to remain our favorites. And lastly, we believe that we should see good traction happening in the second round of rally that may happen in the PSU banks. So these are the three areas where we feel one should look to buy into this correction. This is still very much a bull market correction that we are going through. Whether we close below 19,600 is what probably will decide the direction for the rest of September, which is expiry next week. And unless that happens, I think there is a good chance that we see a bounce back coming in anytime soon.
Rahul, if yesterday's data is to go, if we look at the data, the kind of unwinding of positions in Bank Nifty which happened, does it indicate that we are nearing a kind of a bottom, at least in the small near term, because it's down 900 points in the last 4 days alone, ripe for a pullback, or how would you read that?
Yeah, so banking has been a bit of a challenge, especially on the way up. We've seen banking sort of, taking the lead whenever corrections have happened. And this is where primarily the short positions have been concentrated into. Now, you have two camps in the banking space. One is the PSU bank index, which has just started the big structural rally. On the other hand, you have private bank, which have slowed down, particularly in the last few weeks. And now with the HDFC Bank sort of, taking a fresh cut, private banks will find some time, before they recover and recoup. So my sense is, definitely banks should remain under pressure. Considering, the way yesterday's data came, clearly it is a sign of a concern. So maybe another, 200, 250 points on the Bank Nifty may slide, which is where the 50-day moving average is for the banking index. Like in every bull market, 50-day moving average is like a crucial litmus test for any index to sort of go through. And we do find support over there. The odds come back into the favor of a bounce back. So definitely banks are a bit of a concern, but given the broader market, which is still relatively okay. So if you look at the Nifty 500 index, it is not as bad as probably what the Nifty is or the Bank Nifty is for that matter. So, eyes are on two things. One is how is the broader market behaving in this correction, and second is our FI is actually going short. So yesterday they closed around 2,000 crores worth of long positions in index futures. The long short ratio also slid down, but it will be interesting to see, especially after today's expiry, whether they still continue to hold a long stance on the market. And if they do so, I think there should be a strong case for a bounce back from here.
Mm-hmm. What are your top trading ideas? Do you have any short ideas in this kind of market, or are you looking to buy the decline?
Yeah, so we are looking to buy the decline because we're expecting the risk reward is more favorable for longs than short over here. Like we said, we are bullish on PSC and auto. So on the PSC space, Gas Authority of India, GAIL looks pretty good for a round of an up move from these levels. One can buy with a stop loss at 118 and possibly 140 is very much on the cards in the next maybe 15-20 days. On the auto space, Motors is one stock that we like. It has been continuously consolidating around its key moving averages, and we feel that there is a breakout to be had once we cross the 3461 mark. So buy it once the breakout gets confirmed. I think 3600 is very much on the cards. One can do this on a conditional basis. Once the breakout gets confirmed, it's better to get into that upon confirmation, and we feel that auto should do well going from here.
Biggest culprit, Rahul, for this weakness on the index at least have been Reliance and HDFC Bank. HDFC halted its one-way slide, but Reliance is just not stopping. Today also, it's the third day in a row that 1%, 0.5% kind of a cut coming there.
Yeah, this is probably the reason why Nifty is sort of underperforming the broader market because of these two heavyweights, which are literally like a huge chunk of the Nifty weightage. Now, my sense is HDFC Bank is in a spot of bother below the 1550 mark. 1550 has been defended multiple times in the past. If that breaks, we're seeing another 100-point slide on the banking major. So caution is advised in the same. As far as Reliance is concerned, it is it has been grinding on the way down. But the silver lining is there is a 200-day moving average which is coming in close to at 2340. So maybe another percent or so, and we should again be looking at crucial support, which should sort of provide some relief to the bulls. So my sense is, HDFC Bank still looks like, a pain point. But as far as Reliance is concerned, especially given the way the momentum indicators are placed, it seems like, we should find support around the 200-day moving average.
Okay, Rahul, on that note, we let you go. Appreciate you joining us on the show. But